Good morning, everybody. Hope you're well. 25th of November. It's just gone past 8:30. Welcome to this morning's briefing. If you can hear me clearly and if you can see my charts, please give me a Y for both. Good morning and welcome. So already a much muted start compared to the geopolitical chaos that we saw from the start of the session yesterday. It was literally as we sat down to our trading desks, the news came out about the downed plane, the Russian downed plane in Turkish territory, according to Turkey, or in Syrian territory, according to Russia, of which I'll talk later. But that really set the whole tone for the morning. And we're just after 8 o'clock, if you have a look at the DAX on that morning session, we started to push lower early on. Right from the get-go here, finding resistance at the pivot level at 7:30, 8 o'clock, breaking through S1. We then came back down up to test S1 on a classic test, I should say. We then had a choppy period around the 1100 handle. Now, I was working with one of our employees talking about trading this opportunity, talking about not jumping in on that news. Whilst there's so much uncertainty, it's hard to get hold of the move, but it's much better to wait for the trade that you all know well, but sometimes find hard to implement, which is the classic. And here yesterday on the DAX, we had a perfect example of a classic trade. Really, it was a little bit messy and a little bit noisy, but here it was. We broke through S1, we then came back, but when we finally took it out again, we touched then S2, so that break of S1 straight to S2, coming back up to test towards S1, noise before then breaking lower to S2 again. So you can see how well the pivot levels are working here, and then another classic level on the S2 point here. So it was hard. Ultimately, the trend is clear. Ultimately, you could say from 7:30 in the morning to 1:30 in the afternoon, the main European indice fell by almost 2%. That's the result of this geopolitical fear and the move out of risk assets. But we all know actually trading it was quite tough, and you had to be disciplined overall with our live guys. A relatively mixed bag, some people being able to get hold of it, whilst other people doing the same trade, the same direction, the same idea, but having a very different result, something I'm sure you all know about well. So this morning things have calmed down somewhat on the geopolitical space. We've just had comments coming out from Turkey saying they would do whatever they can to avoid further escalation. But this is something that I believe, and we've talked about for many months now, when it comes into being able to value risk assets at these current levels, and I particularly mean equity prices. When there is so much going on in the world as we have now, just this morning, I'm sure you're aware, a further 12 people have been killed in Tunis and in an explosion in a bus, and this follows what we saw yesterday, which follows what happened in Paris over the weekend, which was only a couple of days after what happened in Lebanon. And we had Mali in between, just 3 days ago. This is really gathering pace, and although it doesn't necessarily affect financial assets per se, whilst we move into this area of super tension, it's almost like, well, I don't want to be over bearish about this, but if you compare 1900 to 1915, and if you look at the year 2000 to 2015, 1900 to 1910, there were all of the murmurings, hidden tensions, cuts in defense spending leading up to the First World War, and it just took one accident. Franz Ferdinand, of course, I'm sure you know your history about that. It took one accident to really set everything going, and this is sadly potentially where I see us in danger of encroaching. And whilst everything is so tight and so tense, it's not going to take much for somebody somewhere to make a mistake. And the fallout of that mistake can be significantly amplified given the current geopolitical environment. So anyway, what happened in Turkey, I mean, this has been going on for months. The Turkish have been infuriated by the Russian planes ever since they've taken action over the downing of their plane in Egypt by ISIS. Another thing I didn't mention in my rundown of recent geopolitical events, frustrating Turkey, obviously, on the Turkish borders, and also because of the contingency of Turkmen that live in Syria. So this isn't actually Turkish sovereignty, but Turkey feels very close to the Turkmen population that live on the western coast of Syria, who are being impacted by the Russian military intervention there, who I think Turkey feel like they want to try and protect. So it is, if it was a mess a year ago, if it was a mess 2 years ago when John Kerry talked about intervention because of the chemical weapons being used by Assad, it certainly hasn't resolved itself now, and we will be driven by further geopolitical events, depending especially on now the West's reaction to the Paris atrocity. And as you saw, I'm sure you've seen in the news, Hollande on the wires talking with Obama about how they are going to escalate their presence in the region. It is a very difficult thing to deal with. Something, more planes bombing deserted towns in Syria isn't necessarily going to have the correct impact, in my opinion. If this is going to be taken head on, then it has to be done intelligently and properly, rather than not bombing in a non-committal way, in my opinion. But anyway, we can have that discussion going forward. So I've talked about equities on the back foot from the morning open. Volatile session though, as Turkey has reined in their rhetoric slightly. Well, the main move in equities yesterday wasn't actually on the bomb on the fallen plane itself. We then got rumors of a downed helicopter, and one of the Russian helicopter pilots was murdered apparently. But actually the big risk off came when Putin started to speak, and his comments went along the lines of how he was looking at the camera. You definitely don't want to get on the wrong side of this guy. His comments went on along the lines of, we have been stabbed in the back, and this is something we will not take lightly. Our relationships with Turkey have been damaged significantly. We will, and then the foreign minister of Russia was due to visit Istanbul. He's cancelled his trip. They also advised all the Russian public not to go to Turkey, to cancel holiday plans into Turkey. The rhetoric was slowly escalating throughout the morning. It has since calmed down. Of course, Putin playing the card that he plays, he has to look strong. He has to give that type of approach. But that's really when we got the move lower in European equities, specifically when Putin started to start his diplomatic discussions. That's equities for you. Let's have a look at gold, oil. As you can understand, as you would predict in gold, obviously gold having a strong session yesterday on the risk off, so moving from 1074 all the way to 1080. So not a huge move in gold. At the same time, throughout the morning session, we did get dollar strength, which would have impacted the move in gold. I, as you know, haven't been trading as frequently as I normally do. I've been waiting for an event. I prefer trading events. I prefer trading markets that move. And oil was no exception yesterday. We finally got it. I wonder if I can put my trades on this chart. If I go to order display on this chart. Hold on a second. I just want to see if my trades come up. Here they are. Let me just make sure that they are only by 66. So, bit of a difficult one actually, and you can certainly see how much of a challenge this trade going long oil was for me. It's never, this is the thing. Unless you're actually doing it, unless you are actually trading, it's hard to appreciate how difficult the timing of these things are. So here you can see I was going long oil. It wasn't, I was trying to get hold of this momentum higher. Now this was an important level, 42.50. If you go to oil on a slightly longer term chart, you can see why. If you go back, you can see that this was the cap for earlier on in the week. We couldn't get above 42.50. This is going all the way back to Wednesday. That's November the 18th. Can you see stopping at 42.50, stopping at 42.50, finding support at 42.50 back on the 12th. So here I am yesterday as we approach 42.50. You know how I like to trade. I was looking for that push higher, looking for that break. It wasn't quite going, so I take it off for nearly a scratch, a small trade, then I take it off for a couple of ticks loss. I try again, it doesn't go. So by now I'm looking at well, I can't remember, a loss of about 6 pips, I think. Goes again, I scratch half, take the other half off. So that's 4 attempts now. My mistake here, as I was communicating with you, was trying to trade that momentum breakout before the cash market opened. Look at the time, it's 1:30 in the afternoon. So without that extra volume, without that extra momentum, this trade was unable to play out. Here we go again then, there it is, look at the time, that is 2 o'clock exactly. This is the cash market open in the oil markets. This is where the volume comes up, and I go long 3 contracts in the main contract of oil, not huge, take a couple off. I then put 3 back on, so now I'm long 5. And there we go, this is the profitable trade. So scaling out on the way up really nicely, taking that trade off, 1, 2, and look where I took the last one off there. So that's where I took, that was the real success, taking that trade off there, 43.20, previous resistance, having overall then having a successful day in oil before then there was another piece taken off there. So you can see slowly scaling out once the market did move, scaling out before then oil came all the way back down. So that was the successful trade. Jim, if you can't see the chart, log out and log back in on HotCom. I'm showing it on HotCom now. So that was the successful trade, but as we all know, it's a case of timing. It was the right idea, but it was the right idea at the wrong time before the cash market opened. And I think some of you, okay, let me repost. And I think some of you were taking the right trade. Some of you can be guilty of getting into an S&P trade, for example, at 9 o'clock in the morning. Or you can be guilty of getting into a T-notes trade at 10 o'clock in the morning London time, and it's just not when the volume is there. I'm not saying your trade won't be successful, but very often if you're trying to trade in a momentum fashion, you need the volume and the momentum. And yes, thank you for talking about API. Last night's API quite a bit higher than today's consensus for the headline DOE figure, standing just at 1 million. So that's also weighing on oil, and did weigh on oil as we got into the evening session. Obviously API coming out a little bit later on. Okay, so that's a review of yesterday. Really busy day, very interesting day, and I hope you guys managed to get hold of some of the momentum. Certainly it makes an interesting session for us. Already coming out this morning then, we've had Norwegian unemployment rate 4.5, Polish rate 9.5 for unemployment. Expected later today, we've got US, important data out of the US. This is all leading up to the December the 16th rate decision, remember. So personal spending 0.3%, core PCE core 0.1%, not exactly high inflationary numbers coming out of the US, although year on year 1.4%, not a million miles away from their 2% target. It's not Thursday, sorry, but it's Thanksgiving tomorrow, so it's a holiday tomorrow, remember. So we get jobless claims today, expected at 270 and 2161 for the continuing claims. So European markets will be open tomorrow, just as a reminder, but we will be closed from 12 o'clock midday. Okay, so of course everybody is absolutely welcome in the morning. Join us, please do, but everything's closed from 12 p.m. New home sales coming out at 3 p.m. PMI, sorry, coming out at 2:45 before we get the University of Michigan confidence also coming at 3 p.m. before we then get the US DOE data at 3:30. So today is packed on the data front. I'm not going to spend too much longer on this market briefing then. I'll let you guys crack on with it. Just in other news to cover quickly, interesting, well, I haven't even mentioned the budget today, so this is going to be very important. For those of you in the office, you would have received a printout of the 10 key things to look out for from George Osborne's autumn statement that starts today. It begins at 12:30. We will be giving the newsfeed live. Obviously, you need to be looking at cable, BP6, the FTSE, QFA. Not expecting a huge impact on financial markets in the short term, to be honest. This is all about a 5-year plan. And in my opinion, you know my behavioral approach, there is nothing more erroneous than trying to make a 5-year plan. Have a look at their last 5-year plan. Just review their last 5-year plan, specifically in their defense spending and their outlook for where defense spending needs to be over the next 5 years. It is totally misguided. I think one fallacy that politicians might believe is they're able to smoothly guide our path over the next 5 years. No, in reality, politics is about responding to unplanned and unpredicted events. Making these long-term plans is incredibly difficult and can sometimes be the worst thing possible, sticking to a plan whilst the environment around you are changing. Anyway, I'm sharing this story. I'm sharing this story in terms of HS2 staff. Osborne's obviously going to try and commit to his budget plan for 2019-2020 for the UK to have a budget surplus of 10 billion rather than the current deficit. Remember, back in 2010, we had an annual deficit of 132 billion. So it's looking for 10 billion surplus, and the fact that 42 HS2 staff to Quango, this story just highlighted to me today, there's certain way, I think this to me makes it harder to swallow perhaps some of the cuts in policing and spending on defence that will be communicated when we're paying 46 staff at HS2 over 150k. Obviously, we do need top talent within that Quango, but perhaps that's taking it a little bit too far. Here, this is a great FT article, 10 things to look out for in the statement. If you're here with us in the office, you would have this printed out in front of you on your desk. Please do have a read through in detail. We'll be talking about this more as we get closer to 12:30. And also, I've covered already, continued tension between Turkey and Russia. Just in other news, I was speaking with Anthony this morning. Apparently, according to a Reuters tweet, China might cut nickel production on Friday. If you have a look at the chart for nickel, I didn't have access to it on my CQG, so I've just gone to a metals chart here. Looking at the nickel price over the last year, we are currently trading on 14-year lows. Now, if you don't know what nickel is, and I have to admit I needed to do a little bit of research on nickel, it's really used as an alloy. 65% of nickel is used to manufacture stainless steels. So nickel is an alloy to be combined with steel in order to make stainless steel. So obviously used in coins, as you know, in the US, but also for electronics, batteries, hybrid cars. So nickel prices, annual lows, and China may well look to cut production on Friday to address this pricing issue. Keep an eye out on the metal space. Even if you're not trading nickel, it might be interesting to look at other metals related to that to see if there's any sympathy in arbitrage opportunity. Having a look at relative currency strength indicators, the euro strong again this morning. You can see this on your Trading Live page. The euro strong again this morning, as it was yesterday, still playing out as a safe haven currency for the euro. Also, I was going to show the correlations matrix as well. Good opportunity yesterday looking at some of these correlations, and today, really, as you would expect, there's nothing unusual in the correlations I'm playing out, other than the Bund isn't really correlated to anything today, so bear that in mind. The Bund has very weak correlations against anything, so watch out for the Bund. Oil, zero correlation, really. Cable and the euro and currencies and gold all having very, very low correlations today. So do bear that in mind if you're looking to trade in an arbitrage fashion. Guys, that's it for the morning briefing. Yesterday was an interesting day, geopolitically a very interesting day. I think we are setting the stall out for A geopolitically packed few months as we head into the Christmas break. On top of that, we've got the Fed decision. On top of that, we've got further ECB commentary, Chinese data, US growth. And on top of all of that, we've got the US budget statement, autumn statement, starting at 12:30. Hold on to your mice. Good luck. Have a good trading session.